Hey, what's going on, everybody? I'm reading through the comments section, and I think it's important that I respond to some of your guys' comments. And I wanted to do a video so everybody gets this response. So the question is, are you confident to link the commodity sector like uranium, for example, to the COVID scenarios that might occur on the horizon? That if X happens with the overall COVID market situation, then Y could be the result in commodities. What I'm asking myself as an inexperienced investor is if commodities, uranium in particular, rather goes up or down if the overall market crashes. Is it safer to stay in cash or uranium when these days come? And then the other question is, I'm going to answer this all in one shot. Does the investment thesis on commodities hinge on hyperinflation? So I'm going to just broadly, brush stroke a whole bunch here over all these questions. So the commodities are extremely cheap. They're at 100-year lows. Their valuations are at 100-year lows in relationship to anything. So number one, commodities are a great investment irrespective of what the market conditions are. They are at 100-year low valuations. So I would rather buy commodities and be in a commodity-related company during a market crash than Tesla or a tech company that's up, I don't even know what the percentage is, 10,000, 20,000, 50,000%. Because if we get in a market crash, those things they're going down. I mean, they are going down. We're at 100-year lows. Now, the opportunities here are so large that I can't not be invested in them. If we get a 30, 40% hit and I'm up 300-400% in my portfolio and it gets cut in half, I'm still up. Now, some of you guys, you're starting to invest now, so you could get a 20, 30, 40%. Even the volatility is pretty big. So you got to get used to this volatility. You got to get used to being thrown around all over the place. I'm used to it, and I understand that volatility affects people and their emotions. And I know you've got hard work, hard-earned money here on the line. I understand that. I've got my money on the line just like you guys. You gotta divorce yourself from that work that you put in. I know this is tough. And you have to focus in on what the investment world is going to be like 4, 5, 6, 7 years down the road. You can't look at this stuff that's happening this second. Now, I don't see any indications of a crash coming. That's the 10-year yield. I'm looking at housing starts, and they're going up. They're not declining. That means inflation's coming. It means that the economy is getting better and that everything is looking good. Now, no one can predict if they're just going to shut the economy down. That, number one, that is incredibly stupid to do, irrespective of how bad of a virus is, because people need food, they need things. If you shut it down, it shuts all those things down. Or they just, here's my rant, or they shut it down and they say, you can produce and you can't produce. That is absolutely unacceptable in my mind. Unacceptable. You cannot do that. Now, uranium does trade like a commodity, and if we have an entire market crash, I would suspect that everything would get sold off at certain quantities somehow. But the things that we're going into have market deficits. But the deficits out in the future for all these commodities are incredible. And those deficits are gonna keep the prices up. Unless you don't want copper, unless you don't want any of these things that the world needs. And we're at 100-year valuation lows. So I would focus on positioning, your position sizes in each company, because if you get too aggressive in one position and that position's not performing well, it's going to cause angst and problems. You might not be, if you're not sleeping well at night, you're probably not positioned correctly in your portfolio. And the best information I can tell you is you really got to understand value and market conditions. And you got to look and read, watch my videos as much as you can, and learn about those conditions and how assets get priced in different market conditions. And I know this seems like a lot, but when you understand that, all those worries kind of go away. And I try to put in front of you a lot of charting stuff, which is telling you what the market thinks. And I see that through charts. And perhaps I can do a better job of explaining what all those charts mean. But right now, if you look at all of the market conditions, when you look at the cost curves, and what cost curves are is uranium, for example, the price of uranium is below the high-cost producers. I don't know if the price of uranium can go down any further than what it already is. I mean, it can, but we're buying at like rock bottom prices. This is the time to buy. And the volatility that you see in this future, you just need to ride it through, because this is what volatile markets are like. You're going to have to shape your being around it. You're going to have to mold your investment outlook around the volatility, and you have to position in a way where it doesn't bother you. And if we do have a crash, I don't think we are, because when you look at yields, the bond market says no crash is coming. Copper says no crash is coming. Platinum says no crash is coming. There's nowhere saying that a crash is coming. Now, if the tech market were to dive, and it will at some point, it will, it could affect our investments in a very short clip. But I wouldn't worry about it, because you're in the undervalued investment, and the potential out there is so large that you should be focusing on the potential and not necessarily focusing on the 30% or 40% dip that we could get. So I don't think the dip's necessarily here, and I don't see it yet. And I'm seeing Apple and these Amazon start to come back up. So, and maybe keep in mind that a lot of these things are getting manipulated too. The yields are getting manipulated in terms of bonds. A lot of things are being manipulated here. But the overall trend, housing starts are up, which means inflation is going to come, and it's going to be a tailwind to our investment. Focus on that. Focus on real estate. If real estate goes, then I would be worried. I would be very worried if real estate goes. Then everything goes, and it will be very bad. So watch real estate. And right now, all of the metrics for real estate are fantastic. It's going to go way higher from the metrics that I see. And real estate typically doesn't move very fast. It's slow moving. So hopefully I answered some of your questions here. Uranium, if we have a huge market sell-off, I'm sure everything will get affected, but I wouldn't focus on that. Focus on the potential. People, if you're worried about a market crash, keep some cash on the side, just like you said. Keep some cash on the side and be prepared. Hopefully you like this answer. If you haven't subscribed to the channel, subscribe, give me a thumbs up. And I appreciate you guys commenting. Thank you for the comments. And thank you for listening to the channel. This is Finding Value.